Well, let's start with the market action of the day. The bulls clawing back in trade as stocks made a dramatic recovery on the Lal Street after an early fall. The Sensex gained over 300 points and back up above the 59,000 mark. The Nifty gained nearly 100 points with mid-cap and bank stocks leading the rally today, so finally closing in the green after a volatile session. In the currency market, the rupee was stuck in a tight range through the day as opposing forces caused volatility. A global dollar rally locked horns with dollars selling by exporters and what traders believe to be RBI intervention. The domestic currency finally closed flat. In the bond market, bond prices climbed off early lows following comments from the RBI governor that the central bank's recent rate hikes were having an impact on reining in inflation. However, yields remain elevated as traders track the rise in crude prices and watched for further cues from the US Fed's Jackson Hole summit that starts this week. Speaking of crude oil prices, the firming up seen in prices overnight continues to hold sway. Despite choppiness, crude oil prices trading over 1% higher as the focus is shifted to supply-side factors. This comes after Saudi Energy said OPEC Plus may consider a cut in oil production to stabilize a volatile market and prop up prices. This has overshadowed concerns that global demand may slip on the back of a recession in many major economies. Well, the top story today, the Adani Group has indirectly acquired more than 29% in news broadcaster NDTV. The Adani Group unit has also announced an open offer for an additional 26% stake at 294 rupees per share. This open offer will cost the Adanis 493 crore rupees. Yash Jain joins us now to take us through the details. Yash, the deal, the way that it's structured and what we should now expect next.
Well, Shereen, the structure is a little complex, but first let me start by explaining the shareholding pattern at NDTV. Promoters Pranoy Roy and Radhika Roy hold a little over 32%. Another promoter entity called RRPR holds around 29% stake. Now, it's this 29% stake belonging to RRPR that has been acquired by Vishwa Pradhan Commercial, a subsidiary of the Adani Group. Interestingly, Adani Group announced the acquisition of Vishwa Pradhan Commercial, the subsidiary that we're talking about, just minutes before the RRPR acquisition was announced. Now, the deal structure is a bit complex, as I said. Vishwa Pradhan has converted warrants issued by RRPR into equity, which gives Vishwa Pradhan an ownership of RRPR's entire stake in NDTV. Now, with Adani Media arm AMG acquiring Vishwa Pradhan, Adani Enterprises indirectly holds a 29% stake in NDTV. Now, what's next? This transaction has triggered an open offer. Adani Group is offering 294 rupees for every share of NDTV. This is a discount of more than 20% to today's closing price. In this open offer, Radhika Roy, Pranoy Roy and the retail shareholders will have the option to tender their shares. Now, Sanjay Fugalia, the CEO of Adani Media Networks, has called this acquisition a significant milestone in the company's journey to pave the path for a new age media across platforms. There is no comment from NDTV on this particular development so far, but just to reiterate, the founders of NDTV, that is Pranoy Roy and Radhika Roy, are left with just around 32% stake in NDTV.
Yes, they are now left with 32% at the end of this transaction. And just yesterday, the Roys had issued a statement to the stock exchanges saying that they had received a query from a business publication asking if the Roys were in talks with the Adani Group. And the Roys had said categorically in the statement that they were not in talks with the Adani Group and neither were they looking at selling their stake to anyone. So the Roys now left with 32%. As Yash pointed out, they do have the option to tender, as do the other public shareholders in the open offer that the Adanis have now launched. Here's a CNBC-TV18 exclusive tonight. Drug maker Cipla has big plans for its business, which include doubling its revenues from its India and US markets over the next 5 years. A large portion of this expansion will come from its wellness business, which has seen good traction across customer categories. The MD and Global CEO Umang Vohra says the plan is to use both acquisitions and new product launches to grow the business fivefold into a 3,000 crore rupee business over the next 5 years. Take a look.
What we are seeing in India is incredible amounts of deepening of the healthcare market into tier 2 and 6 towns. We are seeing a wave towards wellness. And both of these are opportunities that we want to capitalize, not just for India, but also for the rest of the markets across the world. So that will be growth driver number one for us, which is just the deepening of the presence of healthcare in India. And the evolving consumer healthcare space.
Let me start by addressing the wellness segment that you spoke of. And as you pointed out, you have aspirations of building that out even further. How much of that is going to be driven inorganically? Is that an active discussion that you're having with potential players at this point in time? And what would the size be of that business, and what kind of investments do you hope to make within that space?
So we have very large organic brands in the wellness space, and our objective would be to grow and deepen these organically first. Of course, inorganic is a part of the strategy. But I think if you look at just the depth of our organic brands, we have several brands which are 200 odd crores big. The total business right now is about 600 crores. We can see this business growing on the health side itself to close to about 2,500, 3,000 crores over the next 5 years. So we are very bullish about consumer wellness. I think this is a business that will require us to be a lot more D2C oriented as well. In addition to creating equity for these brands with doctors and with patients. So we have large number of brands in the pain space. We have a large franchise in the vitamin space. We are the leaders in the nicotine replacement therapy. And over a period of time, we will create more brands in the cough segment. We will create more brands in the mom and children segment. And I think we feel very bullish about this category in India.
And you can catch the entire conversation with Cipla's head Umang Vora on the record coming up at 9:30 p.m. right here on CNBC-TV18. FMCG player Nestle India says it's seeing strong consumption in urban markets, but rural demand is growing at a lower base. The company's chairman and MD Suresh Narayanan told CNBC-TV18 there is still underlying pressure of commodity inflation, and the company is closely watching food inflation, which remains elevated.
I still am a little bit worried about the underlying commodity inflation that is coming through. Now, one hopes that with a good monsoon, hopefully some of the locally sourced crops that we have, in fact, all of our crops are locally sourced, but nevertheless they are influenced by international prices, that there is some reformation as far as the international prices itself is concerned, which might help us. But food inflation is a matter of concern, and we should be watching out for it.
And other retail players are also upbeat about demand growth. Metro Brand says inflation hasn't impacted demand as much as was expected, while Shoppers Stop expects strong double-digit growth over pre-COVID levels. Take a listen.
All of our concepts of Metro, Mochi, Walkway and Crocs had some very nice gains in all the markets that they operate in all the different categories that we sell in. As we look to the following quarter, the RAI reported strong numbers for July, and Metro is definitely part of that momentum that seems to be happening in India all over. Inflation doesn't seem to have affected the demand as much as one would have thought it might have.
We have a very, very strong plan for the full year number, and we would be looking at a significant growth. While I wouldn't want to get into specific numbers, what I would say is that we would be again looking at strong double-digit growth over the pre-COVID numbers. And that obviously is fueled by two factors. One is the growth engine which we have from our like-for-like stores, but apart from that, also an expansion.
And moving away now from retail to a busy day in the Supreme Court. Let's start with the case concerning so-called freebies. The Supreme Court observed that no one can deny that this was an issue that called for a national debate. The court has also taken exception to comments made by Tamil Nadu's finance minister, questioning the court's jurisdiction in this matter. Ashmit Kumar is standing by to wrap up the court action for us. Ashmit, let's start with the Supreme Court's observations in the freebie case.
Well, the Supreme Court, in fact, deliberated at length on the issue of what freebies are and how to proceed with that. To begin with, the Supreme Court noted that it's difficult to come up with a watertight definition of freebies, citing the example in Bihar where cycles were given to females and that led to upliftment. But nonetheless, the Supreme Court did observe that this is a serious issue, definitely merits debate, and towards that end, the Supreme Court appears to be leaning in favor of constituting some form of committee that will comprise of various experts that will, in fact, deliberate on the issue. In fact, the Supreme Court Court even asked the question as to who would be a fit candidate to lead such a commission. The Supreme Court observed that ideally it would have wanted for this debate to take place in Parliament, but that now that it has been seized of the question, it wouldn't mind delving into the subject. In fact, the Supreme Court even made observations with respect to certain responses coming from certain quarters that have in fact raised questions regarding the Supreme Court's jurisdiction. Nonetheless, in response to some of these questions, some interesting answers emerged. Kapil Sibal, who has been requested or invited by the Supreme Court as an amicus in this matter, suggested that under the FRBM Act, there is already fiscal discipline rules in place. 3% cap is placed already on states, and that can be a mechanism used to check for fiscal indiscipline by ensuring that there are lower grants issued to states that have breached those limits. That was a suggestion which in fact was echoed by the Aam Aadmi Party as well. The Aam Aadmi Party, represented by Abhishek Manu Singhvi, argued that to monitor or to regulate promises or election speeches would be tantamount to issuing a gag scheme that would be violative of free speech laws, and that the only feasible way to go around it would be in fact to rely on the FRBM targets. The centre, however, had a very different take on all of this. The centre said that, look, this is something that desperately needs the attention of the court, needs some form of regulation, citing issues in the power sector, saying that freebies issued by various governments are bordering fiscal indiscipline, and that the political parties cannot endanger the economic health of the country for seeking the top seat, the top position. The Supreme Court for now has stopped shy, has paused before making any orders. The hearing, we understand, will continue tomorrow, and that's perhaps when we can expect more clarity.
The Supreme Court has also issued a notice to Baba Ramdev and the Union government. It's agreed to hear a plea filed by the Indian Medical Association over Baba Ramdev's comments criticizing allopathic medicines. The court has asked him what is the guarantee that Ayurvedic medicines perform better than allopathic medicines. The Supreme Court has agreed to hear a petition challenging the remission granted to the convicts in the 2002 Bilkis Banu rape case. The plea sought setting aside of the order granting remission to the convicts and their immediate rearrest. All the 11 convicts sentenced to life imprisonment were freed after the Gujarat government approved their remission. The Apex Court has declared Section 3, Subsection 2 of the Benami Transaction Prohibition Act as unconstitutional. The clause prescribes that whoever enters into any Benami transaction shall be punishable with imprisonment for a term which may extend to 3 years or with a fine or with both. The court said the clause was manifestly arbitrary. Members of the Parliamentary Panel on Finance have met representatives of big tech companies like Meta, Google, Amazon, Apple and others. The panel questioned their use of data, the fee imposed on app developers and other alleged anti-competitive practices. Tech companies defended their policies and claimed that there is no dearth of competition. Parikshit standing by with more. Parikshit, what were the questions and how did the tech companies respond?
Well, the Parliamentary Committee sought answers to 10 questions on what they feel is leading to anti-competitive practices in the digital space. A lot of this was directed towards Google. In fact, sources tell us that panel sought answers on why 30% fee is charged for in-app purchases and high subscription fees as well. There were questions asked on platform neutrality when online platforms serve both as a marketplace and a competitor. Executives of these companies were quizzed on the keyword bidding policy and also how data is used and whether the usage of data somehow restricts the entry of other players in the market. At the same time, these companies were quizzed about how they define markets, who their competitors are, and how they are complying with the EU Digital Markets Act, and what is the policy they resort to while suspending apps. This is also on the basis of some complaints they have got from Indian tech companies over the last few months. So what did these companies say? In fact, sources tell us that Google shared its India revenue. Google, in fact, told the parliamentary panel that it earned 13,887 crores in revenue from sale of advertisement space to advertisers in India in FY21. They also said that they're moving away from a one-size-fits-all approach when it comes to billing, when it comes to subscription fees. They've also commenced a pilot in India for user choice billing. They've started with Spotify. They will add more partners. And they've also extended the timeline for integrating Indian users to the Google Play's billing system to 31st October 2022. Meta said that aggregate amount of data held by a firm does not really create barriers to entry, and Meta operates in a global market, and there are several competitors to Meta in the Indian market as well. Netflix also said that when it comes to entertainment data, it can easily be replicated by competitors, and data does not act as a barrier to entry. So this committee sought suggestions, had summoned all these companies, their top executives, and will be preparing a report for the government as well.
All right, Parikshit, many thanks for joining us. And staying with tech, in global news, a former Twitter executive turned a whistleblower alleging that the company has been reckless and negligent when it came to cybersecurity policies. Iman Havez joins us now with the latest. Iman, who is the whistleblower? What are his claims?
The whistleblower is Twitter's former head of security, Peter Zatko. He's a hacker who's known by the nickname Mudge. The news was broken jointly this morning by the Washington Post and CNN. The contents of the whistleblower complaint that was filed here were confirmed to CNBC by Zatko's legal team. In that written whistleblower complaint filed with federal agencies, the Post reports that Zatko describes Twitter as a chaotic and rudderless company beset by infighting, unable to properly protect its 238 million daily users, including government agencies, heads of state, and other influential public figures. Now, the complaint also alleges that Twitter violated terms of a settlement with the Federal Trade Commission by falsely claiming it had a solid security plan. That's according to the Washington Post. Now, the key problem here appears to be that too many employees inside Twitter, thousands of them, had access that was not tracked well to this core company software. And that raises the prospect of disgruntled or malicious employees using that access for their own benefit. And the Post also reports that the company says that the complaint says that the company prioritized user growth over reducing spam, and executives there stood to make bonuses for themselves of as much as $10 million tied to increases in daily users. No bonuses, though, the Post says, were tied to decreases in spam. Now, Mudge was hired at Twitter by Jack Dorsey in late 2020. He was fired by the company in January of this year. And in a statement to CNBC this morning, a Twitter spokesperson said Mr. Zatko was fired from his senior executive role at Twitter in January 2022 for ineffective leadership and poor performance. What we've seen so far is a false narrative about Twitter and our privacy and data security practices that is riddled with inconsistencies and inaccuracies and lacks important context. Mr. Zatko's allegations and opportunistic timing appear designed to capture attention and inflict harm on Twitter, its customers, and its shareholders. And guys, importantly, in a separate interview with CNN that aired this morning, Zatko's legal team said he has not had direct contact with Elon Musk, who, of course, is in this heated battle with Twitter over his takeover effort.
To a CNBC-TV18 exclusive on the monetization of Hotel Ashok. Sources tell us that 22 companies, including Indian Hotels and DLF, have shown interest to run the hotel. Sapna standing by with more. Sapna, who was at the roadshow?
Well, 22 parties have shown interest in the first roadshow as far as Hotel Ashok's monetization plan is concerned, and this is a sizable number. Some of the big names are basically Taj, Leela, Hilton, Andaz, JLL, DLF. These are some of the players that have come forward so far. Probably Oberoi has not participated yet, and ITC is something that we are awaiting clarity on whether they were part of the roadshow. Having said that, two important clarifications over here. Number one, of course, the common ask that was there among the industry participants was the fact that they want a single monetization bid both for the property, both for the hotel as well as for the land parcel. If that happens, then the lease tenure will also change, because for Hotel Ashok, they were considering 60 odd years of lease and 99 years for the land parcel. So if this goes through, then obviously it could be around 60 odd years of lease, and this is something the government may actually consider. That's one. Second, the government is also clarifying that construction may be allowed in terms of service apartments, convention centers. Of course, this all will be subject to the lease conditions, but that's a flexibility and a leeway that the government is willing to give. Number three, of course, last but not the least, the government could also be open to JVs and real estate players partnering with PE investors. Even that could work out. So this could be pretty positive for the industry, at least at this stage. You're beginning to understand the inputs will be collated and taken up by the CLD, that is the core group on disinvestment. And once that clearance comes through, then I think the next stage of the transaction will start.
Sapna, many thanks for joining us. Let's now take a look at the headlines in the startup space. Arundhati Ramanam standing by with more. Aru, over to you.
Well, thank you so much for that. Here are the key headlines from the startup world. MojoCare, a full-stack health and wellness clinic, raises $20.6 million in a Series A fundraising round led by Facebook co-founder Eduardo Sverren's B Capital. Existing investors Chirate Ventures, Sequoia India Surge, and Better Capital also participated. The company will use the funds to scale across omni-channel GTMs with a distribution-first approach. In more fundraising news, WinUall, a social commerce platform, bagged 17 crore rupees from Dream Incubator, Inflection Point Ventures, and other existing investors. The company aims to achieve $100 million gross merchandise volume annually by the end of 2023. And in global news, Elon Musk is seeking documents from Twitter co-founder Jack Dorsey to walk away from his $44 billion deal for the social media company. According to a court filing seen by Reuters, Dorsey has asked for documents and communications about Musk's April agreement to buy the company and about spam accounts on the platform. Meanwhile, Apple employees have hit back at the tech giant's return to office orders and launched a petition saying that the firm risks stifling diversity and staff well-being by restricting their ability to work remotely. New York Post reported CEO Tim Cook had asked workers to come into the office for at least 3 days a week from September. And with that, it is back to you.
All right, Aru. Thanks very much for joining us. News coming in from the UK. Rishi Sunak met members of the Indian diaspora from the Conservative Party at a campaign hustings amidst reports of Liz Truss emerging as the favourite to become the nation's next Prime Minister. Sunak said he would like to change the UK-India relationship to make it a more two-way exchange. Sanjay Suri brings us more.
Namaste ji. Salam. Game show. Where's that gold player? Kitna. CF India, it's great to be with you. It is a privilege to be here tonight, and that is because aap sab mere parivar ho.
That's Rishi Sunak right behind on stage, getting mobbed after this event with the Indian community. Many hundreds attended, but that's not all, of course, who wanted to. There was a long waiting list. Many more could not get here. The fact is that Rishi Sunak is immensely popular among Indians here, and in fact, popularity doesn't quite describe it. His advent and his position in Britain now has been transformative for Indians here. Transformative, of course, also for British political history. But a lot of first-generation Indians here, and there are many in this room, would never have imagined that an Indian or a British citizen of Indian origin, to put it more precisely, could have come already as far as he has. And the fact that he is a serious contender is success in it.
UK-India relationship, obviously, we know it's important, right? We represent the living bridge between our two countries. But in a speech I gave recently, I said we're all very aware of the opportunity for the UK to sell things and do things in India. But actually, we need to look at that relationship differently, because there's an enormous amount that we here in the UK can learn from India. So I want to make sure that it's easy for our students to also travel to India to study and learn.
What has won Rishi a lot of admirers here and a lot of support, and of course, no doubt he hopes votes as well, because many here are members of the Conservative Party, is that he's holding on to his faith firmly, that he's not compromising on that.
It's part of the Hindu tradition, and see how well he follows it. These pictures remit a lot about his trust and faith and religion.
Yeah, it's a very good thing. Why not? Because everybody keeping that traditional. Why can't Hindu keep it that traditional?
Great pleasure. It's very polite, very friendly, very interested in what I do for a living. We had a brief chat, and really hope he has all the success he deserves.
So basically, I just say to him that I wish him a lot of luck. Thank you for giving us the opportunity to even meet him.
I think it was a great way to know Rishi's plans, what is the way forward, and who is the next candidate that we can vote for.
Around 500 plus, I think, should have been joined, and people are looking forward, probably first British Prime Minister.
This is fantastic. I mean, it's very unusual for a politician to meet individually. He's taking his time, he cares for people.
All right, with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned, the news continues.